recap with SC Securities. Let's have a look at some of the latest developments in the Sri Lankan economy and financial markets. Through the domestic debt optimization, the Central Bank of Sri Lanka expects to achieve future fiscal targets of reducing public debt stocks below 95% of total GDP by 2032, bringing down the annual gross financing needs to below 13% of GDP in the period of 2027 and 2032, bringing down the annual foreign debt servicing to below 4.5% of GDP in the period of 2027 to 2032. The expected debt service reduction during the period between 2022 and 2027 is forecasted to be close to $16.9 billion. The indicative terms of Sri Lanka's domestic debt optimization are to convert CBL's T-bills to T-bonds, while T-bills and T-bonds held by banks are excluded from the DDO. Superannuation funds T-bonds to be exchanged for longer-term maturity bonds. Sri Lankan development bonds and foreign currency banking units would be entitled to choose between one of the three options. Option 1 and 2 gives the opportunity of converting outstanding SLDBs or FCBUs into USD denominated instruments, while option 3 with the opportunity of converting them into new LKR denominated instruments. The Central Bank of Sri Lanka has further relaxed its monetary stance by reducing policy rates by 200 basis points, with the standing deposit facility rate and standing lending facility rate at 11% and 12% respectively. This decision was made in response to the faster than anticipated slowdown of inflation, and CBSL projects headline inflation to decrease to single-digit levels in the early third quarter of 2023. On June 2023, the headline inflation measured by the year-on-year change in Colombo Consumer Price Index declined sharply to 12% from 25.2% in May 2023, aligning with the disinflation path set by the Central Bank of Sri Lanka. Food inflation dropped to 4.1% from 21.5%, while non-food inflation decreased to 16.2% from 27.0%. Fitch Ratings has downgraded Sri Lanka's rupee bond to C from CC in response to the announcement of domestic debt restructuring plan, and anticipates a further downgrade to restricted default after the plan's further implementation. The rating agency plans to downgrade the long-term local currency issue default rating to restricted default once the exchange offer is finalized and confirmed to be executed within July. Sri Lanka has received a $250 million budget support loan from the World Bank, marking the first disbursement of total $500 million loan. The funds are linked to the structural benchmarks in the IMF program and will be received in two installments. $500 million would be allocated for budgetary support, while $200 million will be designated for welfare support for those who were severely impacted by the crisis. With the recent Treasury bill auction, we can see that T-bill rates has drastically decreased. The 91-day T-bill rate decreased by 521 basis points to 17.79%. The 182-day T-bill rate decreased by 356 basis points to 15.93%, and the 1-year T-bill rate decreased by 313 basis points to 13.86%. Let's take a look at this week's Colombo Stock Exchange market status. Thank you for watching, and we will be back next week.